Well, hello everyone. It's Oscar Joffrey, co-founder, CEO of KoreConX, the world's first all-in-one platform, bringing you the ability to launch a fully compliant security token or tokenizing your securities in your company. Today, Dr. Kiran and myself are here to talk to you about a very important topic that, oddly enough, requires a bit of clarity. Shouldn't be a surprise. This whole market at the moment is looking for information, and the better informed you are, the better it is that you will make the right decision. So today we're here to talk about what is crypto and the difference between crypto and tokenization of securities. So Dr. Kiran and I are going to have a nice little chat like we always do to bring some light into this subject matter, and that is very important to be had. So let's start by defining the two. So I'm going to start this a little bit, and then I'm going to ask Dr. Kiran to join the conversation here with me. But first of all, I mean, what's really important here is that what is crypto? So I'm going to give in a very most simplest terms, crypto and cryptocurrency equals coin. That's the most common term you hear, in which is a currency. And a currency is managed differently than you put it in your wallet. And that's what you do. You put your money in your wallet, or you go to your bank account and you store it. Tokenization is much different. Is you are issuing a position in your company. It could either be a voting or non-voting. It could be a debt. It could be a convertible debenture, a bond. It could be an assortment, but it's a security offered from your company. It is not a currency. And I know I just highlighted just on a simple overview, but I wanted to make sure that we were clear that they are distinctively two different elements altogether. So, Dr. Kiran, you're there with me this afternoon?
Yes, I am, Oscar.
Great.
Thank you. This is a very important subject, Oscar. As you know, there's a lot of confusion around this one. And many people, they kind of use this entire framework of cryptocurrencies to promote ICOs, which then became illegal. And there are a lot of issues with that, as you know. And so I think, if we can highlight some of those issues and why these currencies cannot be just used as a pure investment vehicle, that'd be just awesome. I think that level of clarity is very important for this audience.
I agree. I think it's important for both to understand how they're different. And what we've done here, you and I, we've broken it down in very simple languages. So let's go through the understanding the differences between the two. So right from the get-go, as I said, a crypto is a currency. So, from your definition, Dr. Kiran, just give us your highlight of a currency, what it is, and so forth.
A currency is basically, in my opinion, it's it's actually the legal definition also. It's an economic definition. A currency is just a representation of money in some form. And money, as we know, is a standard, a store, and a measure and medium of some underlying value of economic activity. So as such, you've got all these fiat currencies. It all starts with the barter economy, the gold standard, the fiat currencies, or whatever can be deemed as currency and store of economic value. And the cryptocurrency it's digital, it's digitized with the intent of making it function as a currency, as an alternative to fiat currency for various reasons. The philosophical roots of that are very different, but that's sort of the essence of it.
Okay. And of course, from the security, which it is something issued by a company, not a government, not an entity. It's not a form of money or currency is defined. It is an ownership in a company in whatever form it may be, or so it has different elements in. But you are not able to use it in a form of currency to buy things. You can sell it and get currency, and you can use currency to buy it. But that's as far as it goes. So that's,
and I think one of the important things here is, one is a payment instrument and the other one is a securities instrument. Those two are very different. And I don't think, Oscar, people really understand, where regulation plays into this one. They just kind of think that, hey, just because it's a payment instrument, I can skirt all the securities regulations, but that's not true.
No, that's exactly it. I mean, when you look at crypto currencies like Bitcoin, Litecoin, Ether, and all that, the regulation is very different for them. They are managed by under the money transmitter component, where tokenized securities or security tokens are securities law, securities regulator, two different types of regulators. Now, that regulator could share the same name, but they'll have two different divisions, and each of these divisions manage it totally different. And because of that, the way you sell these products, whether you sell crypto or you sell a security, will be based on the securities law, the regulation that you use within them. And
Absolutely.
sorry, you were going to say?
Absolutely, and I think there are some implications, because of the differences in how regulators treat these two instruments. There are a lot of differences about how to actually exchange these instruments, whether you call it an exchange as in a payment or it's a trade. And then, if it's a trade, obviously the issues of, what is the difference in value between how we acquired it and what we sold it for. I mean, these things kind of come to the play, don't they?
Yeah, they do. And look, there is an article that I don't read that somehow intertwines it to, today just look, we're not here to say crypto is bad and one is better. We're just trying to make sure that people are clear. So, it's a currency. It's regulated by the money transmitter. And some regulators treat it as a commodity. Others have another, but again, it is regulated totally different. As Dr. Kiran stated, currency, you use it as a form of a payment. If a company wants to accept crypto as a form of payment for their securities, you can do that. There's nothing wrong with that. And if you want to accept bananas or a peanut, nothing will stop you of that. If you feel that that's the value representing the ownership, the security you're selling. So I think that's really important. And as you start going down the list here, that you see that we put together, it gets more complicated now when people start talking about trading. Would you not agree? I mean, we hear this, oh, I'm trading on this exchange and I want to trade my securities there. I think that's where the other layer of confusion occurs, is that because people don't understand the difference between a currency and a security, then you obviously are you get the other elements of each of them intertwined, and the next one is obviously trading of these two types of digital assets per se, one being crypto and the other one being the security token.
Oh, absolutely. And, cryptocurrencies or any currency for that matter, Oscar, is really a point in time transaction, right? You pay for something, you balance your book and you're done with it. But
Yes.
securities don't just end there, right? I mean, they have a life cycle and a life after the trade as well, right? I mean, I think that's an important distinction as well.
Agreed, agreed. So let's talk about trading, because everybody, that's all we ever hear about. So we talked about it. It's on, it is something that's regulated. It's a commodity. We have trading exchanges. Everybody talks about, Oscar, you trading here, or I'm sure Kiran, you've gotten the same request. So
Yes.
I mean, here's some of the exchanges that are regulated under SEC and FINRA, and here companies like Mercury.cash,
Yep. Coinbase.
Coinbase, yes, of course, Coinbase, very important. So now you understand it from those are where you can trade your crypto, right? I mean,
Oh, yeah.
that's the important element, right?
Absolutely. And I think what people don't really understand is that these exchanges need to be registered and be regulated for various
Yes.
reasons, right? Yeah.
And they need to be to protect the investors at large, making sure that when the trade is occurring, it's being done by somebody who knows how to operate an exchange.
Absolutely. Absolutely. Yeah. And it's also to prevent all these spurious and fake trades that are just there, pump and dump schemes,
Yes, yes.
just people trading back and forth, just for the heck of it. You look at all these wonderful market caps and volumes and say, who's really trading all this stuff? It's the same bunch of people doing it back and forth.
That's right. That's right. And of course, the anonymous thing. We're not here to say one way or another, but we just want to make sure people understand what the differences are. Things to look for now. I mean, when you go to Coinbase or Mercury.cash, you will see that they have it right on their website. They're FinSEC regulated. It
Yep.
goes to show you the maturity of the market and their better understanding if they want to be in the business for a longer term rather than just a short run. Now, if we look, so that's where you trade your crypto. Now you want to trade your securities are different. Now we got platforms like Templum. You have platforms like Open Finance that are also regulated, but it's a different regulation. Now they need an ATS license, alternative trading system license, which often is related to a broker dealer that's registered. There's a whole bunch of other regulations they need to follow. So once again, very different. Now, does it mean that you cannot be a crypto exchange and also have an ATS license? Not at all. But people need to understand they're very distinctively different, and you will need to provide more information in one versus the other because of that complexity.
Is it because it's more about protecting your investors over a longer cycle period that it's important for ATS operators to also be registered? Is that the key motivation?
Well, part of it, but at the same time, I mean, as we all know, when you make an investment in a company, you have to use some exemption in order to invest because you're obviously there expecting a return on your investment, right? Currencies is all speculation, whether it goes up and down, and you can use it immediately. At least that's the hope to buy things and all that. So the ATS operators still have to do KYC ID verification and also suitability, make sure the investor is suitable and qualifies. So there's a lot of different things that they need to do versus in crypto where, it's ID verification, AML, and that's about it. I mean, look, you got $100, you can go to any airport or any place and say, I would like to exchange my dollars to euros, and they charge you a handling fee. All those places are money transmitters. They're regulated and they're allowed to exchange capital. So you don't do the same thing to buy securities anywhere. It doesn't change it, put it in online. But the difference is, Dr. Grant, start coming up in the next three areas where one of the things is that in cryptocurrency, crypto is once you purchase it, there's no additional corporate actions. You can put it in your wallet. You can put it in your wallet, just like you put the money that you just exchanged and voila, you're gone. And then you can use it to buy anything you like. But with securities.
Yeah, under securities, we hear this phrase, corporate actions, right? So
Yes.
I'm not sure, I mean, that doesn't really apply to the cryptocurrencies, right? But it's very, very critical in securities.
It is because, in a company, corporate actions are, so what happens if the company wants to go public? What happens if the company is doing another round of financing? What are my shareholder rights? Right of first refusal. What if the individual shareholder wants to have joint ownership or beneficiary owner? The company wants to go public. It wants to go through a merger, acquisition. I mean, there are thousands of different types of corporate actions a company could deal with. We're just touching where cryptocurrency, none. I mean, I bought it, I exchanged it, and voila. And look, I applaud all those individuals that have been involved in the crypto space and have been willing to engage in that business. And what's happening now is that it's getting more structured so we can make it mainstream. And that's a very positive thing. But we need to make sure that we have a clear definition what the two are, because when you are in discussion with investors, you can't mix up crypto with security token. You can use crypto to buy security tokens or tokenized securities, but they're not both the same. And that's an important, and obviously the corporate actions is one element of it. And then of course, the jurisdictions. Of course, crypto is like anything else. It's a money transmitter business. Yes, you can buy from different countries, but you need to make sure you have your licenses in order to do so, because there is reporting for taxes and so forth that now clearly is coming into the cycle.
Absolutely. Oscar, there's one other thing that I think is very, very important. So if I have money in my wallet, it's a cash, right?
Yes.
There is a custodian for that. In other words, my bank is a safekeeper of my account and my money and everything else, right? But in the crypto world, we had this issue that, some scammer issuers came up and then just ran away with all that cash and everything else. But there is this concept that there needs to be a custodian. Now, that is a very well understood concept in the securities world, is it not?
It is actually, we've had it there forever, and there's obviously been custodians for the fiat world, but now because of cryptocurrency, finally we got some really big names like Fidelity that are coming in, that are going to change this market. BitGo, which recently received some fairly significant investment from one of the leading firms in Wall Street, and Prime Trust. These custodians are going to be important for investor confidence who are buying into the crypto space, or who may be required to have a custodian because of the rules, how they invest in it. So that's another element that people have not looked into this, that if we want the real capital, institutional capital buying to cryptocurrency to use it as a form of payment back and forth, they also have to follow rules and regulations about who holds their currency, whether fiat or crypto, during the time of that transaction. And often it's the custodian. Now, so that's for crypto. And of course, for security tokens, those rules have been clearly laid out many, many years ago. And no technology is ever going to remove them anytime soon. And those are called transfer agent. And if you are going to want your token, your security token or tokenized security to trade on a secondary market, registered ATS, you're going to need a transfer agent for your company. And at that moment, any mention of wallet or your token holder, your shareholder holding that in their wallet is out the door. Because I mean, think about it. Let's put tokenization on the side for a moment. For anybody who raised money in their company before, who in the right mind gave their investor their share certificate to put in their wallet? Nobody. Uh, Investors would take a copy of it, store it in their filing cabinet, or some would give it to their lawyer to store it. In most cases, the company would retain it in their corporate records and hire transfer agents to maintain it. Nothing has changed that. And the role of the transfer agent, like a custodian, is to bring trust. That's the most important thing that needs to be clear.
Absolutely, absolutely. Couldn't agree with you more. So where does it leave people who are kind of looking at, security tokens, and how to even get started? What are some takeaways or things that they need to be very cognizant of?
That's a very good question. So um, it's how do they work together is an important part, and it's not that I think it's one. It's just that I think people need to know how they do come together. So one, if you own Bitcoin or Ether or any form of crypto, can you use that to invest in a company to then receive a token from a security token or a tokenized security from that company? The answer is yes. As long as the company wants to accept it and retain it, no problem. There are some regulatory compliance you need to be aware of.
Yeah.
That's important. Every country is different, but in generality, a company can accept a peanut, a banana, whatever form in exchange for their securities in their company. Keep in mind, a security is a owner in the company, so they're going to benefit if the company goes public, gets acquired. Obviously, that's the big win. That's how we protect investors. Now, in most cases around the globe, broker dealers are not allowed to accept crypto when the investor wants to invest in either a security token or tokenized security or any form of security. Now, that's about to change, but until such time that it does,
Yeah.
only the company can accept it. But
exactly, like in a direct offering.
Correct. But what needs to be clear is that that's how they work together. There is no other meshing of the two elements. And I've heard companies where, Oscar, I want to use crypto to get a security token, and I want my investors to then have, an Ether token and to then be able to convert it to a Bitcoin. And I'm like, okay, you've been going back and forth between two different types of classes of digital assets. It doesn't work that way. Right, so they're two distinctive buckets, and you need to understand how to use them properly. But overall, look, I think this is a great day for all of us. The fact that we're even having this discussion today tells you how far we've come. So the real big takeaway for everybody is that when you're speaking to anybody and is asking you to look at their company and look at what they're providing, you now have the tools in front of you. You know the two elements, correct? I mean, one is, what is a crypto? Now you know. Now you have, and you can go through it. If somebody's asking you to invest in their coin and so forth, you know what questions to ask because you know now it's regulated. And if it's not, and if they're not regulated, then you need to ask yourself a number of questions why you would get involved. But the point is that you are having a better and same thing for tokenized securities.
Yes,
You need to follow the regulations. What exemption are you going to use?
that's right.
What exemption are you going to use in the United States versus Canada or the UK, Singapore, Australia, New Zealand, UAE, any country in the world? Each of them have different securities laws that you need to follow. It's not complicated. This is one thing I want to say. Technology does make things better, but it doesn't make things go away. So, as always, Dr. Kiran and I are always eager to hear from you. We're easy to find. You can search for us on LinkedIn, Twitter, Facebook. You can obviously find us now on our YouTube channel, and we have lots of exciting things to talk about. We love to hear from you, what you want to hear from us to discuss that we can help you bring a little bit more clarity to it. And we want to thank you again for your time today and enjoy your time in the world of digitized assets.